Good morning, and thanks so much for tuning in to the Trade Setup. I'm Neeraj Shah, and it's a packed week because the Fed meet would highlight the jam-packed week. And okay, I think there is some issue here and there with our videos, but I think we are sorted now, right? So the central banks and Federal Reserve meeting decision out on Wednesday is arguably the most important one. Will they give a decisive mandate or indication of the taper? That's the key question in the minds of everybody. There's, of course, Bank of Japan, Bank of England, as I read out, Swiss National Bank, and some other policy gatherings taking place, plus elections in Canada, flash PMIs. There's lots to watch out for on the global front this week. And from an Indian perspective, it's really the global activity that will drive all the action around. Now, what the world markets did on Friday is important. The US markets had a bit of a pullback, and I think the moves around the world aren't exactly most conducive. You would anyways expect that ahead of the Fed meet, everybody would want to be a bit cautious. So I urge people to be a bit cautious on the long side, but we'll come to that in a moment. Keep in mind, from the US markets perspective, the reason why we've had one of the reasons probably why we've had 2 straight weeks of losses, and I can maybe blame it on earnings expectations as well. It goes unnoticed at times, but there's this wonderful chart that came up in a Bloomberg story, which I thought I should bring to you. And look at this: the analyst profit estimates for the S&P 500 have started to plateau. If you can't make sense of this chart, I'll just quickly make the sense for you. The blue line is the 2022 EPS estimate. The white line is the 2021 EPS estimate, and as you can see, both of them are plateauing, as a result of which the S&P 500 index has started to come off a little bit in the last few. And as we all know, the last 2 weeks have been 2 consistent weeks of a pullback. Now, will this continue? Who knows? I mean, I frankly can't make sense of what the estimates for India would be, let alone what will happen to the US earnings estimates, right? But if there is an interesting chart or a data point, I think it's best for me to bring it out to you to point out what could be happening. So this is one of the possibilities. Having said that, the 2 straight weeks of a decline in Friday's move might have put the Asian screen and the SGX Nifty 2 under a bit of a check. So I'm not saying there will be a deep gash or anything like that. If anything, the cues are positive per se internally, but I think you will see mixed action across the bourses in the session today. So, well, Asia, as you can see, a bit of a mixed bag, and the SGX Nifty, for whatever it's worth, as a starting indicator, should come up on your screen next. And I would be really surprised if there's a runaway uptick anticipated. If anything, about 1% lower, and this could well be the order of the day. Let's wait and watch if there's some more pullback. Now, I think which is where the trade setup becomes very important. I was looking at various charts, various columns, including Dr. C.K. Narayan's column, and I'm trying to bring some of these for you. Now, two things. The story on our website from Dr. C.K. Narayan points out this very interesting thing about how the put call options and what he calls the max pain, that strike is at around 17,600. I think when I read the story, the point that he's trying to make it is that even during the last 2 weeks of maybe sideways move or marginal upticks that we've seen in certain cases, of course, we haven't really seen massive call writing. What we've seen is extremely heavy put writing. And remember, writing is done by institutions, the more informed investors generally. So what CK is trying to say is that if you just look at the quantum of call writing versus the put writing, there is more confidence in the people writing the puts, believing that the market will go up, as opposed to the confidence of the call writers who believe that the upsides may be capped. So I think it's a very, and based on his analysis, the max pain strike is at about 17,600, and evasive or protective action would only come in if the prices remain below 17,550 is what he believes. And I've brought out his point in the trade setup that until that happens, you probably can stay positive. But yes, if there is a move wherein the Nifty remains below 17,550 consistently, then maybe protective action is required. There's Sandeep Tandon's mail that came to me of Quant Mutual Fund, who I believe is a decent macro analyst, who believes that it might be time to be in defensives. We've seen a bunch of brokerages turning very optimistic on defensive names as well. So pick and choose. Maybe the period of making very high risky bets might might warrant some bit of caution. And I think I was looking at the Bloomberg relative rotation graph, or RRG, and that seems to suggest that in information technology and real estate, two very diverse sectors from a risk perspective, may relatively outperform because they are in the strongest quadrant. That's the point that the relative rotation graph makes. It divides the markets into four quadrants, and whether sectors are into strong quadrant or the weak quadrant. So I thought I'll bring out what might actually relatively outperform in the session or in the sessions to come. So therefore, do watch out for all of this. Now, what about stocks to watch in a scenario like this? I think a bunch of them. I've saved the best for the last, but I'm bringing you the newsmakers first. So first, Delta Corp. I think the CM Pramod Sawant has said that Goa will reopen casinos and nightclubs this week. So Delta Corp might well be a stock in focus. I think one of the dailies had quoted him as having said this as well, but on record, of course. So Delta Corp might be interesting to watch today and over the next few days. Lupin has gotten 7 observations for its Goa facility. Now, the nature of the observations and the seriousness would be out soon, but the larger point being that if they've gotten 7 observations, if they are light, then great. If they are not, then this could be a bit of a issue for a stock getting negative news in a market which is starting to move sideways to marginally off. Do watch out for Lupin in the session today. Now, any action concerned with the Shapoorji Pallonji group brings Sterling Wilson Solar in focus, and which is why I'm getting this. There is no direct connection per se, but there are multiple indirect connections from the group, and therefore, what could happen to the debt of Sterling Wilson Solar, etc. But yes, last night the news came in that Advent International will acquire a controlling stake in Eureka Forbes from Shapoorji Pallonji Group. I think the deal is at about 4,400 crores. Let's wait and watch if the market believes that SW Solar will do well. Then Wipro, they've announced setting up of a new co-innovation space with Google Cloud. Everybody wants to make bigger and bigger forays and presence felt in cloud. If you do that with a large global giant, it probably only adds to the luster of the move. They've done it with Google. They'll provide, and this will provide in-house technical expertise for cloud adoption and acceleration of business transformation for customers. I'm sure it adds a feather in the cap for Wipro's offerings. Let's see if it is really that big a positive or it's kind of okay. Some other stocks, and 3 or 4 that I thought had individual news points which I should bring to you because they might react. So Rail Vikas Nigam Limited, or RVNL, they have received a contract from MP Metro Rail Corporation worth 1,034 crores. That's a sizable one. So RVNL could be in focus. Rail Vikas, that is. Adani Power, the Supreme Court is going to reconsider its ruling in favor of the company in the GVNL case. So this is an old one, but it's now going to reconsider that ruling, which was put it in Adani Power's favor some time back. So therefore, this slight negative for Adani Power. Welspun India shows the confidence of textile companies per se. This company is going to invest about 800 crore on capacity enhancement over the next 2 years, and in the state of Gujarat, I presume. So this is interesting show of confidence. That's why I thought it was important to bring it. KPIT and the Vanguard. I mean, emerging market index is okay, but it's the Vanguard Emerging Market Index Fund, which has bought 24 lakh shares. We're missing the term Vanguard here, but it's the Vanguard Fund which has bought it, and that's why it's important. Acacia sold, so that's also a noted name, but Vanguard buying typically is positive, considered positive. Let's wait and watch. And KPIT could be a stock in focus. As also JSPL, they've placed the highest bid for Kasia Iron Ore Mines block in Odisha as per Steel Mint. So do watch out for this one too. I might miss a few stocks here and there, viewers. Please keep that in mind. But these I thought were important ones. Railway PSUs would be in focus because the Cabinet Secretariat has asked the Ministry of Railways to act upon a series of recommendations, including a merger of our Rail Vikas Nigam into IRCON, of RailTel into IRCTC, and a takeover of Brathwaite and Company by RITES. So multiple listed entities out here, and that's why I thought it was important to bring. Now, whether this will go through, who knows? If it goes through, what are the ratios? Who knows? And if are the ratios positive or negative? Who knows? So these stocks remain in focus. Some people might trade them as well, but I just thought it was important to bring the piece of news. The impact of this really is unknown. If somebody tells you they know the impact, I would presume they are fibbing. But yeah, do watch out. Some brokerage notes that I thought were interesting, and Nomura's note on some of the cap good majors on automation is interesting. They initiated coverage on Honeywell, Siemens, and ABB, I think. They're neutral on the other two, but on Honeywell Auto, The target is 53750. They believe green shoots on increased industrial capex for automation and digitalization theme after COVID-19 outbreak are being seen. They prefer Honeywell on consistent earnings growth and EBITDA margin over the past decade, and their clarity on cost savings and increased support from global parent on sourcing services from India would place Honeywell on a stronger footing than its peers. So they want some clarity, of course. Some has come. They want some more. But if there is increased support from the global parent, then it could actually help Honeywell even more. Their target is 53,750, which is about a 25% premium over current market price. So do watch out if Honeywell reacts. You know why. Jeffrey's note on ITC is interesting. It's a high conviction buy for them. The target price has been raised to 300 from 275. They say that no rate change in any CES sector by the GST Council is a positive development for ITC. They believe it's set to see a recovery in cigarette volumes and earnings in the coming quarters, and valuations are very attractive, and the stock offers about a 5% yield. So that's why they are bullish on ITC. By the way, two things out here which I haven't given graphics for, but I just want to bring out. One, the GST Council base, which is that ITC is not the only one. On Varun Beverages, I think there was not a very major change made. So that could be interesting. Only 1% of its portfolio gets impacted by the carbonated beverages GST. Now, again, a lot of talk, chatter over social media and WhatsApp groups about GST on food delivery. I don't think there's a new GST, as I understand, and I've written it down as well. If food delivery platforms are made liable, so the onus passes from one hand of restaurants to the food delivery platforms. I don't think the customer, your or my bill when we order, changes in any fashion whatsoever. So keep that at the back of your mind. Uh, there's no need to panic over a Zomato investment because of this piece of news. Just bear that in mind. And by the way, speaking of ITC, we've seen that bouncing, and this move is positive. I think we've seen upticks in estimates for Coal India, for ONGC. There is a bent towards moving into defensives from the sell side. Please be mindful of that. A bunch of defensive value names, Coal India, ONGC, Oil India, ITC, are all now starting to find favor. Could the tide be turning? That's the question. And lastly, some WhatsApp forwards on stocks like Easy Trip Planners, Tejas Networks, BLS International. Now, the the veracity of some of these, the seriousness of some of these is a very difficult thing to gauge. Please be careful if you receive a WhatsApp forward saying, oh, these stocks are going to be on a lower circuit for the next 15, 20 sessions because X has been done and Y has been done and the management is involved, etc., etc. I would suggest don't believe it. Do your own checks and then try and believe it. I'm sure the managements would be out there on multiple media platforms trying to explain their stance as well. Try and hear what they have to say and then take a call. The stocks may well react today, but I'm just asking you all to be careful if you go out and trade into some of these. Tejas Networks, for example, is now being taken over by the Tata Group and all of that. So just do your checks. The falls might well be warranted, but I would urge all of you to take a call after trying to analyze this properly, as opposed to just trading on the basis of a WhatsApp forward. That is very, very risky. Thanks so much for tuning into the Trade Setup. Have a safe, profitable day ahead. And this week we're getting you some stellar names from the JP Morgan Summit. Sanjay Mukim joins us today. Paul Uren, who's the head of investment banking of the APAC region, would join in tomorrow. We'll talk to James Sullivan, Jehangir Aziz. So lots of very interesting conversations from JPM Summit as well as otherwise lined up on BloombergQuint this week. You might want to tune in for some of those. Stay safe and have a good week ahead.